What's up, you guys? It's Paul here from the 9 to 5 Investors Club channel. In this video, I want to talk to you quickly about what it means for the market for Pfizer's COVID vaccine, as well as some of the option trades that I'm watching for this week for earnings, as well as some key levels on the S&P 500 index that I'm watching right now that can potentially help us determine how we should go forward with our trades, okay? So right off the bat, with Pfizer announcing their COVID vaccine, that is an absolutely huge relief for a lot of investors, because two of the biggest uncertainties that we were facing so far are obviously the elections at first and then the rise in COVID cases. And so without knowing when a vaccine would come out, obviously there was a lot of uncertainty priced into the market. And as soon as Pfizer and BioNTech came out with a potential vaccine for us that has been proven to be 90% effective, a lot of investors started jumping in, okay? Now, two things happened here. First of all S&P 500 and Dow stocks actually soared today, mainly in sectors like retail, travel industry, entertainment, and things of the like, because those are the ones which have been mostly beaten down with lockdown and people not wanting to go out. So airline stocks like Boeing, Delta, American Airlines, all of them soared a lot. Obviously, rideshare companies like Uber and Lyft shot up a lot too, because people were more likely to go out eventually, and I know a lot of investors were excited about that, on top of the fact that their Prop 22 got approved, where they don't have to consider their drivers as employees. So Uber and Lyft soared a lot as well. Even Disney soared quite a bit today, because if they can quickly get back to normal capacity, obviously that's going to help them with their revenue and profits. So all these different stocks in different sectors shot up a lot. REITs shot up as well, because a lot of malls can potentially start opening back up eventually. So investors are optimistic about that. The ones that really got hit are obviously the work from home stocks that you can see here. Zoom down 17%, Peloton down 20%. So all the work from home stocks that have been benefiting a lot during this lockdown situation and the pandemic situation have gotten hit really bad. And even yesterday, when we were looking at the futures, NASDAQ looked like it was up quite a bit. And as soon as markets actually opened on Monday with the news from Pfizer, a lot of tech stocks got destroyed today. So those are the key things that you need to keep in mind. But here's another article from MarketWatch that I was reading today, where they talked about how it's worth letting the dust settle after today's big moves, because there are risks to every rally. And that makes sense, because even though this was a huge positive news for the market about the vaccine news, there's still a lot of questions in terms of how long it'll take for the vaccine to become available to the masses, how many months it might still take, what it's really going to take for everyone to take it. There's the fact that a lot of people who don't even want to take these vaccines, and some people wanting to still continue working from home. So there's just still a lot of uncertainty, but definitely from a macro perspective, the fact that we have a potential vaccine is really, really good news for the markets. And I'm glad that we finally have something to show, okay? In terms of the key levels that I'm watching for the SPY, we very, very quickly shot up past the all-time highs earlier this morning. They shot up as high as 365 here. If you look at the one-day chart, it shot up as high as 365, or actually even 366 intraday, and then it started coming back down again. And right now, we are closer to this, closer to that 358 level, where we actually is slightly below the all-time high. So that's exactly the key level that I was watching today, to see if it can really break past 358. If I draw a trend line here real quick. So if you look at this black line here, that was the previous all-time high near the 358. We blew past it on market open, shot up quite a bit, up to 366, 367. Then we started coming down, and what I really wanted to watch was this critical level here, to see if it could potentially bounce off of it and turn this resistance into support. But unfortunately, that didn't happen. We broke down through it and started going down. And towards the end of the day, it's almost been flat, still kind of in the green. But thing is, we're not fully in the clear yet, because like I was saying, there is still a lot of uncertainty left in the market and a lot of things to watch out for. But for the SPY, that's the key level that I'm watching, okay? In terms of earning plays, we had Beyond Meat that announced earnings today. Obviously, they did not do well at all. Analysts were expecting actually a profit, but they lost money on it. They did not make a profit. They were expected to grow 40% year over year, but they only rose 2%, which is absolutely sad. But they did have some good news that they're partnering up with Beyond Meat, and they were the people who worked on the McDonald's McPlant burger, which is a really interesting name. But I think in the long term, if they can really continue their partnership with McDonald's, they could potentially benefit in the long term. But clearly earnings were a disappointment and they dropped 22% after hours. Now, in terms of the options place that I have, it's a little complex, and I play too many things at once. Honestly, kind of each hedged against each other. At first, I had a strangle earlier today, just before this initial drop here, and it quickly dropped. The put shot up, and so I quickly sold out of it for a quick $470 profit. But then even right around here, I got on an iron condor to see if it'll stay between. Based on this iron condor, I had this 170 to 50 call and a 170 call on the call credit side. And on the put credit side, I had the 124 put and I sold the 126 put, and I needed Beyond to stay between 126 and 170 by expiration, but clearly it shot past it. So there's a good chance I'm going to lose on the iron condor unless Beyond can recover over the next couple of days and go back about 126. Then I could be okay in the iron condor. But again, just before market close, because Beyond is typically a big mover after earnings, just as a hedge against my iron condor, I also got this strangle where I got two of these $200 calls and two of the 125 puts expiring on November 13th. Okay, so as you can see, for these puts I only paid around 130, which is not too bad at all. But with this huge move in Beyond, about 22%, I think the puts can easily 10x and at least compensate for the losses on iron condor. So I'm not too worried about it. Honestly, I wish I just chose the strangle right off the bat, because that's normally what I play for earnings anyway. But that's something that I had today. Another trade that I'm watching for tomorrow, Disney also is coming out with earnings. I initially had 5 of these 148 calls. I got them way too early in the day, right off the open. That was a mistake, so I paid too high of a premium for it. So even though Disney had a really good day, I'm actually down on my calls because I got them way too high when they were still way out here. I should have waited for this pullback before buying in, but it is what it is. And towards the end of the day, I got 13 of this 132 puts, just as a hedge against these calls, because Disney is coming out with earnings tomorrow, so I'll be watching out for that. So this is a combination, is essentially a strangle here. I have left here. Left shot up like crazy today, up 26%. I initially had several $40 calls. Later on towards the day, I took a quick 28% profit on the calls. And then just before market close again, I got 5 of these strangles, where I got 5 of the $40 calls and 5 of the $35 puts, because Lyft also has earnings tomorrow. So what I'm expecting is that this rally has been pretty amazing on Lyft, 51.58% in just the last 1 week. Even before earnings came out, a lot of it had to do with a reaction to how Uber was performing, a reaction to Prop 22's approval. So I'm curious to see how they'll react after earnings. I would be really surprised if they continue spiking even after a 50% move, which is why I still have calls on it. But there's a good chance we may see a pullback, which is why I was also getting a put as a hedge against my calls. Okay, so I'm definitely watching Lyft and Disney. Those are the 2 earnings plays that I'm going to play for tomorrow. We have other earnings coming up the rest of the week as well, but I'll make a video about them once I actually make some trades. Okay, so those are what I'm watching, guys, Beyond for how they're going to react tomorrow and potential continuation. Disney earnings tomorrow, Lyft earnings tomorrow, and the key levels for SPY. Okay, so that's what I wanted to share with you guys here today. I hope that helps you out. If you did, please do smash that like button. It helps out the channel and the YouTube algorithm a lot. Leave a comment below if you have any questions, or if there are any other company earnings that you think I should watch out for. I'd love to hear from you. Be sure to subscribe if you haven't already and hit that notification bell, okay? Also, be sure to join Discord if you haven't already. That's where I actually post all these trades. So I'd love to have you on there if you aren't already, okay? Thanks again for watching, guys, and until next time.